Investing in NPS has become easy, but it is not easy to track its performance. Before you invest, find out which pension fund has given the best returns. One can put a maximum 50% in equity funds, so the overall returns for the investor should take into account the performance of the balance 50%. We have looked at blended returns of 4 different combinations of the equity, corporate debt and gilt funds. A conservative investor would follow the allocation of MIP funds, putting only 20% in stocks, 30% in corporate bonds and 50% in gilts. Lastly, the ultra-safe investor would not invest in equities, put 40% in corporate bond fund and the balance 60% in the gilt fund. The healthy returns from the NPS come at a time when the interest rate of the employees' provident fund is being hotly debated and the interest rate for the public provident fund has been pruned to 8.1%. This raises an important question. At least 40% of the maturity corpus has to be put in an annuity to earn a monthly pension. Annuity rates in India are very low compared to what other options can offer. The Senior Citizen Savings Scheme, for instance, gives 8.6% returns compared to 6.75% offered by annuities that return the principal after death. The gilt funds of NPS are holding long-term bonds with an average maturity of over 19 years and a modified duration of about 9 years. These funds have done well because interest rate cuts have pushed down bond yields. But experts say this trend will not stay forever. The best performing fund, ICICI Prudential Pension Fund, has given double-digit returns. It is interesting to note that the 3-year and 5-year SIP returns of all the pension funds are in double digits as well. HDFC Pension Fund, which has seen a smart increase in its AUM, already has more than 10% of its corpus invested in non-Nifty scrips.